Hi everyone and welcome to TOOP TV. This week we're looking at the impact of technology on the real estate industry. So to tie in with the technology theme, we're looking at some of the latest technologies you can put into your home to set up a state-of-the-art home cinema. We're also going to Beaumont to look at a gorgeous character home and one of SA's finest. So don't forget to send in those real estate questions and we'll answer them at the end of the show. And also, we are live and streaming to your iPads and to your iPhones. So if you have one, get on board right away. So if you've got an iPad or you've got an iPhone, you make sure you get them going right now. And a lot of interesting things happening in the market at the moment. There's stories galore. We'll run through them in a minute, but from 20% increase over the next 3 years to collapsing, and I've got all these blogging happening where people are telling me there's doomsday, like it's really fascinating. So we're going to spend quite a bit of time on this week's show looking right into that. And also today, whether it is in fact the right time to be buying investment property, especially given the rental market is tightening and returns are starting to increase. And our reporter Elise is probably in London right now watching this live and interactive on her iPhone because she just won the SAFM trip to London. You got to be kidding me. Friday afternoon she gets a phone call. Saturday she's on a plane. She's gone to London for the week. So stepping in today, we've got some of the other team, and so thanks for helping. Elise, if you are watching in London, I hope you're having a ball. Now let's look at this week's headlines, and for that we go to Miss Jen Drew, who is our Hoot and Toot manager. So let's go to see Jen.
Well, Anthony, lots happening in news headlines once again this week, if you can make it past all of the Socceroos media. But as for property, first up we have 7,000 new homes being planned for the hills. Around 1,300 hectares of land around Mount Barker and Nan is planning to be rezoned under a new state government proposal. Next, council rates are again on the rise, a little bit more pain perhaps for homeowners, but not really that surprising given our continued increase in the median house price around the state. Stamp duty is again back in the spotlight after recent figures released showed our first home buyers are now at 5-year lows, the lowest numbers in 5 years. And off the back of that, BIS Shrapnel have forecast a 20% increase in house prices over the next 3 years, so perhaps putting that Australian dream a little bit further out of reach for some. But on a more positive note, Adelaide has finished at the top of a new league table, ranking the town planning performance of Australia's capital cities. So we're back in #1 place.
So property's really in the news. It always seems to be. It's quite amazing that way. Now we've got some big things happening in accounting circles. I'm not sure how many of you are aware, but there's big takeover, the bigger getting bigger. And the biggest of all is now, of course, Deloitte's. And Rob De Monte, who's the managing partner of Deloitte's, that firm, joins me here in the studio today. Welcome, Rob.
Hi, Anthony. How are you?
Good, good. Now, Rob, I know that you're a very placid and gentle kind of guy.
That's
but
me.
What's happening? You've taken over another firm to now be absolutely, unequivocally the #1 in size in accounting?
Yes, certainly in Adelaide that's the case. MHM, a fine accounting firm on Green Hill Road, has decided to join Deloitte, and so from 1 July we'll be a very large firm catering for all sorts of clients from small to large.
Now I know John Hood, who was the managing partner of MHM,
Yep.
a really great guy.
Yep.
So how did that come about? Who hunted who?
Well, it's actually interesting. I mean, John and I have known each other for a number of years, and I think about 4 years ago we got into some early conversations about what it would be like to be together. And 4 years down the track, we've decided that we should do that here in Adelaide for the benefit of our clients and our people.
Now, Rob, we had Peter Williams, who's the head of your digital component of your business.
Yeah, Deloitte Digital. Yep.
Yeah, and he was fascinating. He was on an episode about 5 ago. Is that what Deloitte's do? They have sort of these specialty. Just tell me very briefly about that.
Yeah, well, we have a lot of innovation in our business. So we look at our clients and have a look at the sorts of things that are happening in the market and their needs, and certainly around digital. As you would know, that's certainly in the forefront at the moment, so we have a real focus on that. And the other area is our private business, and so with MHM coming on board, we now have launched Deloitte Private, which is focusing on individuals and private companies.
Okay, so now, as you know, this is a real estate show. What I'm fascinated in, we have a lot of investors that watch the program and developers. Now, if you were an investor and owned 1 or 2 properties and maybe had a trust or something,
Yep.
presumably that they're the people that are most attracted to a business like yours?
Oh, absolutely. I mean, if you've got any complexity in your structuring and your tax affairs, you're certainly advised to go to a reputable accounting firm such as ours. But certainly, if you have some complexity, that's the sure bet.
Now, specific to property, what things would you tick off 2 weeks out from the end of the financial year? Is there any advice you can give in particular to people that are listening who haven't yet done that?
Probably left it too late, I suspect, with 2 weeks to go. But there are some things that you need to think about. Certainly around superannuation. If you've got a self-managed super fund, if you haven't made your contributions, they certainly need to be in by 30th of June. If you had thought about it previously with super funds, you can now acquire property within the super fund. There are arrangements now you can do that. So there's a whole range of things that you should have been thinking about probably before now. My advice would be go see your accountant, get your advice in before the 30th of June. If you haven't done it yet, do it now.
But things like maintenance of gutters, things like repairs to the front gates, things like those sort of things presumably could still be done within the next 2 weeks.
Absolutely. If you can get some workers to come.
Actually, that's quite true, isn't it?
That's right. So I think you probably should have been planning those people some weeks ago anyway. But yes, certainly anything that is of a deductible expense in relation to investment properties, you want to get through this financial year, you need to be onto that now.
Now, Rob, this program we're really delving into what's happening with the market. There's so much discussion about it. What's your take on the property market and just the economy in general?
Well, property market it's still pretty tight. I mean, I know, and you would know, that property at the upper end of the market is very tight. There's not many properties around. Interest rates certainly on hold at the moment, as you know. My feeling for that is that it probably will be on hold for a little while. I think they will go up over time, but I think the...
To what, Rob?
Well, the Reserve Bank has talked about another 3-4 interest rate rises probably.
So a bit over 5.
Yeah, over the course of the next 18 months, I think is probably right. Earlier there was predictions of this calendar year, but I think it'll take a little bit longer. We're not out of the woods globally on the GFC, and I think we'll still see some impact from that. So I think it'll start to slow down a bit, but there will be increases.
So would you, or I mean, does the advice vary, but in a general sense, would your company or your advisors be advising to get into property, out of property, into shares, out of shares, or steady as she goes?
Our advice would be that if the investment is a smart investment, whether it be property or whether it be shares, then it's always a good time to get into those investments. If those investments are on the edge, in other words, that they're iffy, then probably the advice would be not to get into it. And that's the same advice whether it's a tough market in terms of GFC or it's a strong market. You've always got to look at the underlying value of the investment, and I think that goes for property or shares.
Now, Deloitte's are an international firm.
Yes.
Do you have circulars going around advising different segments around the world of what's happening?
Yes, we do. And we have some particular industry specialties as well, and property is one of those areas. And we've got a partner here, Steve Simiato, in our Adelaide office here, who is focused on the property sector. But we have other sectors as well, whether it be manufacturing, whether it be, in fact, now with MHM coming on board, the pharmacy sector. They've got a real strong specialty in the pharmacy side. So there are different sectors, locally, nationally and globally, in terms of providing expert advice in those areas.
So with Steve,
yep.
So if someone was looking for advice, they don't know an accountant,
yep.
Is he intimidating?
No, he's not. He's not. He's a really good bloke, just like you are.
Oh, you're great. Thanks.
Yeah, that's it.
Yeah. So basically, it's no big deal to give him a ring, have a chat with him, get some advice.
Absolutely.
Right, okay.
Yeah, if you contact the Deloitte number, ask for Steve Simiato, he's focused in that property sector.
Thanks, Rob. Now, Rob, we're going to go to RP Data and look at some, we've got a discussion, phone interview that really delves into what's happening in today's property market. So let's go and see that now.
Terrific.